And I'm seeing some analysts in the gold market trying to suggest that we're getting a triple top here in gold, and that gold is going to collapse, very similar to this triple top. And I'm going to set your mind at ease today. This is not the case. This triple top here came during a left translating 8-year cycle. So here's the beginning of a new 8-year cycle, the advancing phase, and we're in the declining phase. Didn't bottom here until almost 2016. So this top came a little left of center. So a left translated 8-year cycle, but one that held well above the previous 8-year cycle low. So this was a cyclical bear market, not a secular bear market. The long-term bull market that began back in 2000 was still intact. We just had a huge move, almost 1,000%. And so, it was time for a consolidation phase before we could get the next leg up. And I'm pretty convinced that this leg will get our true final bubble phase. I don't think this qualifies here as a bubble. It wasn't, I didn't see every Tom, Dick, and Harry buying gold and silver. The price wasn't stretched 60, 70, 100% above the 200-day moving average. So I think this was just the top of the first phase of the secular bull, and then we had a cyclical bear market, a long basing phase, and we're now getting ready to embark on the what I believe will be the bubble phase of this bull market that started in 2000. So this top is not coming after a parabolic move and after 1,000%, like this one did. This test of this resistance zone double top is coming very early in a new 8-year cycle. So this was the 8-year cycle low right here. This was the previous 8-year cycle low. Here's the next 8-year cycle low, a little bit short, as was the one before it, which is not unusual. They can run anywhere from 7 years to 8.5, 9 years. Usually a long cycle will follow a short one. So anyway, no question in my mind at this point that this is the final 8-year cycle low in gold. We're just, very, we're not even a year. We're barely a half a year into the advancing phase of a new 8-year cycle. So there is nothing similar in this chart as to this chart back here. So, I think you can just ignore these people that are trying to call a triple top and the gold is going to collapse. It's not going to happen. We're not in a bear market phase. We're in a bull market phase and getting ready to transition into the bubble phase once this resistance here at this double top breaks. And the rule is the more times price knocks on the door, the more likely it is that the door is going to open. And considering how early it is in a new 8-year cycle, and we're within spitting distance of knocking on this door again, price is either going to go through this on this third test of this resistance, or we'll get a small pullback and then we'll break through on the fourth test. I don't think we're going to need a big pullback this time once we test this. It's still very early in the new intermediate cycle here, so we've got lots of weeks to test this, pull back, and then break out. And the rule, as I've said before, breakouts that occur early in a cycle tend to produce sustained moves. Breakouts that occur late in the cycle usually end up as failures. They don't produce a sustained move. This intermediate cycle is set up to break out early and give us a sustained move, and I think we'll start the bubble phase in earnest once we break out, and that's probably going to start during this intermediate cycle. So here's another confirmation that this is not a bear market. We're in the very early stages of another bull market, and I'm going to show you the final confirmation for that. All right, this is the CRB, the commodity index. You can see the last bull market topped here in the summer of 2008. That's when the oil shot up to $147, and that's what's reflective of this parabolic move. It's that huge move in oil for the most part. Oil is the biggest component of the CRB. And then we started a multi-year, 14 or 12-year bear market. And so you can see this cycle left translated just like the 8-year cycle in gold, but in this case, unlike gold, the CRB made a lower low. So here was our last 3-year cycle low. The multi-year cycle is a little different in the CRB than gold. For the commodities, that's a 3.5-year cycle. So here's a 3-year cycle low. We get the crash off this parabolic bubble formation, and it moves below this prior 3-year cycle low. And then we get a counter trend bounce, and nowhere does the CRB make higher highs. So here's the top of this 3-year cycle, obviously did not make a higher high. And then we had an extreme left translated cycle right here that topped pretty quickly, and again did not make a higher high. And this cycle, now this 3-year cycle right translated, so it did not make a lower low, but it also didn't make a higher high, so just kind of stuck in no man's land. This cycle left translated, and you expect left translated cycles to make lower lows, which this one did. You can see we had an extreme breakdown here into the 2016 bottom. This is where gold put in its bear market bottom right here. And then the CRB went on to have one more multi-year cycle that did make a lower low during the COVID crash. Gold, obviously, much stronger than the rest of the commodity complex, did not really even get close to dropping below the 2015 lows. Talking about gold now. But here we have what is a new bull market. So as I said, no higher highs anywhere on this chart. That changed. During the crash, oil was negative. I think it was negative $35. They were, people were paying somebody to take their oil. They had no place to store it. That was the bell ringing that the commodity bear market was over. And then we started the first 3-year cycle out of that final bear market bottom. So now we're in a secular bull market in commodities, and now we are making higher highs. So you can see, price easily went above this 3-year cycle high. It also has gone above this 3-year cycle high, and then this 3-year cycle topped with the invasion in Ukraine. And then we've been in the declining phase of this 3-year cycle now for about a year. Right translated cycle, don't expect that to move below the previous cycle low. As you can see, not even close. I'm about 99% convinced that we've got our 3-year cycle low here. But the main takeaway from this is that the CRB is no longer in a secular bear market. It is now in a secular bull market. You can't have the CRB in a bull market and not have gold in a bull market. So these people, these analysts that are telling you that gold's forming a triple top and that it's going to collapse, they just don't know what they're talking about. Like I said, you can't have a bear market in gold and have a secular bull market in everything else. And this chart is telling us that the commodity complex started a new secular bull market here in 2020. And I also see a lot of analysts saying that stocks, in order for commodities to be in a bull market, stocks have to be in a bear market, and that is not true. They can both be in bull markets together. There are two fundamental components that are driving both of these markets. A big component, of course, is money printing. That's what's part of what's driving the commodity market. It is what is driving the stock market. And then there's another fundamental driving commodity markets, and that is that we broke supply chains during the COVID madness, and it's going to take many years to repair those, and we're making it worse by this insane idea that we have to shut down the fossil fuel industry. The world runs on oil and natural gas and coal. We're not going to, anytime in the near future, we're not going to convert to anything different. We're not going to need less of that. We're going to need more. If the 8 billion people on this earth have any shot at all at the kind of life of abundance that we have in the United States and Eastern or Western Europe, we're going to need more fossil fuels, not less. But governments are trying to make it as hard as possible for energy companies to run their business, and they're clearly antagonistic to the energy companies. So what energy company in their right mind is going to spend billions trying to find new supply when governments are actively trying to put you out of business? And so governments in their infinite stupidity are going to make this worse. The inflation cycle is going to, this is only the first 3-year cycles. We're starting the next advancing phase. This one's going to be even bigger. I expect we'll probably test or exceed these highs during this upcoming 3-year cycle. And before this is over, I'm going to say again, this is going to be a piece of cake. Oil's going to $200, piece of cake. Probably $250 before this secular bull market is over, because who knows how long it's going to be before politicians come to their senses and realize that their policies are making this worse and going to prolong the inflation cycle much longer than it would be if they would let the markets just work naturally. So new bull market in commodities, that's your guarantee that gold is also in a bull market. It's not forming a triple top. You can't have a bull market in commodities and a bear market in gold. And you can have a bull market in commodities and a bull market in stocks at the same time.